Welcome to Policy on Demand. I'm Andrew Pryor. Last week, Treasury and the IRS issued proposed regulations regarding the income tax credit under the Inflation Reduction Act for the purchase of qualifying new clean vehicles. Joining us today to discuss the guidance is Randa Barsoum. Randa, welcome.
Hi, Andrew. Thanks for having me.
Randa, could you refresh us on the overall new income tax credit for the purchase of qualifying new clean vehicles?
Sure, I'd be happy to. So prior to the Inflation Reduction Act passing in August of 2022, both individuals and businesses could claim a credit under the old Section 30D rules. With the passage of the IRA, several key changes have occurred. The first and most important one was that 30D has been amended to specifically apply to individuals who are purchasing clean vehicles for personal use or for business use. A new Section 45W was enacted specifically for businesses to claim a commercial clean vehicle credit, and 45W has its own set of rules and requirements that are different from Section 30D. Under the new 30D, there are taxpayer income and vehicle cost limitations that have been imposed, which really are intended to meet the goals of the government to make clean vehicles more accessible to lower and middle income Americans. It also imposes stringent requirements on the vehicles themselves to qualify. For example, vehicles must be assembled in North America, and that was a rule that was enacted beginning in August of 2022. And now with the proposed regs being issued, the sourcing of critical minerals and battery components, those two requirements are now enacted. Lastly, and the most important piece here is that the credit itself and the way you calculate that credit has changed. Under the old 30D rules, the credit was calculated based on the battery's capacity in kilowatts, up to a maximum amount of $7,500. Under the new 30D rules, the credit is broken up into two components. The first is a $3,750 credit for vehicles that meet the critical mineral requirements, and a second component of $3,750 for vehicles that meet the battery component requirements for a maximum of $7,500 credit.
All right. So with that in mind, could you discuss the significance of the guidance and its potential impact?
Sure. So the proposed regs really laid out 3 steps on how to calculate the percentage of the critical minerals that are in a battery that will make it eligible to meet the critical mineral requirements to claim that first $3,750 credit. It also provided and laid out the rules 4-step process to determine the value of the battery components that also will meet the requirements for that second $3,750. The rules are extremely complex and they're incomplete. Treasury is intending to publish additional guidance, and that was made clear in the preamble to the regulations. These requirements really are the responsibility of the qualified manufacturer to assess and determine whether the requirements are met for each of their respective vehicles. Qualified manufacturers are also the ones responsible to report under penalties of perjury whether their vehicles are eligible for these credits. And that reporting goes to the IRS as well as consumers. So with guidance still pending and all the complexities involved with these rules, it's going to be very challenging for the qualified manufacturers to really comply. In addition, there has been a transition rule in effect since January 1st, which allowed taxpayers who wanted to buy a clean vehicle before these proposed regs were enacted to purchase those vehicles and claim a credit under the old rules. So what's happened now is that once April 18th hits, a taxpayer who purchases a vehicle that may have qualified under the old rules, that same vehicle may not qualify any longer. And so, there's going to be, I think, a mad rush to go purchase and deliver and take delivery on those vehicles prior to April 18th. What's interesting is there was no transition rule enacted to allow the taxpayer who may have purchased the vehicle prior to April 18th, but wasn't going to take possession until after April 18th to still claim the credit under the old rules. So unfortunately, anyone who's already purchased a vehicle at this point, but isn't going to take delivery until after April 18th, may not qualify for the credit any longer, since the new rules will have kicked in around critical mineral and battery components. There's been several articles that were published that really have acknowledged that there's going to be few, if any, vehicles that will meet both the critical mineral and battery component requirements in the coming future. The good news is we are seeing a lot of investment, over $10 billion, in that facilities that are going to be built to produce these critical mineral and battery components that will meet the requirements under 30D in the US. While this is clearly in line with the government's policies around promoting resilient supply chains and domestic manufacturing, and also strengthening our supply chains with our trading partners, what's unclear is when these facilities are going to be ready and producing the eligible components. It could be several years before vehicles will meet this critical mineral and battery component threshold requirements, and those requirements, the threshold for those requirements, will be increasing beginning in 2025. So currently, where the thresholds may be at 40 or 50%, they will increase each year by 10%. So there'll be some catching up to do to meet those thresholds by the time these facilities are ready to go online. I also want to take a moment to remind our viewers that the stringent rules that we've been discussing only apply to vehicles purchased by individuals under 30D, and not to clean commercial vehicles purchased by businesses for commercial use. In fact, 45W does not have the same requirements related to North America assembly, nor does it have the critical mineral or battery component requirements. So in essence, that same vehicle that may not qualify for 30D will qualify for 45W. And it's really on the responsibility of the qualified manufacturers that are going to have to report by VIN the eligibility of the vehicle under both 30D and 45W.
Now, Rhonda, the IRS also updated its Clean Vehicle Credit FAQs. Do the FAQs provide any additional clarity?
Yeah, so the FAQs were updated to really just reflect what was in the proposed regs. So it is in line with the latest guidance. It does include some useful links to government sites where taxpayers can check the vehicle's eligibility for the Clean Vehicle Credit. Those sites are going to be updated regularly as qualified manufacturers report on their respective vehicles. So, if someone were to go in right now, it's still going to reflect eligibility requirements under the old 30D rules. And the expectation is, come April 18th, those sites will be updated to reflect which vehicles will meet that critical mineral and battery component requirements.
Rhonda, finally, what action should companies consider taking in response to this guidance?
Well, for individuals, you still have time to go out and get an electric vehicle as long as you're buying and taking delivery by April 18th. But for businesses, some things to consider. So the Treasury has requested comments on these proposed regs by June 16th. And even though 30D, again, applies specifically to individuals, companies may want to consider submitting comments to get clarification on whether the rules are expected to be extended to 45W, since 45W does reference 30D in certain aspects. Also, for qualified manufacturers, really the onus is on them, and they're going to need to set up a process to evaluate their critical mineral and battery component supply chains to assess whether their clean vehicles are going to be in compliance with these requirements. The importance here is that the accurate reporting of the vehicle eligibility is really going to be critical for taxpayers to be able to claim the credits.
Rhonda, thanks so much for sharing your insights.
Thank you, Andrew.
As always, thank you for spending this time with us. Have a great week, and we'll see you next time.